And, recently the cumulative volume on the Shanghai Metals and Futures Exchange combined surpasses that of the COMEX, making it the number 2 most actively traded center for metals. Pierre Lassonde just came out and said the day the Shanghai Gold Exchange surpasses the COMEX in transactions will mark a seismic shift. Gold's pricing power will move decisively from the west to the east. Summed up, the gold price will ultimately be decided not in the United States, but in the East. How close are we from that moment where these fugazi numbers that you can trade at such massive, distorted levels of paper contracts to physical behind it, the pricing will move that way.
The global gold market is experiencing a significant transformation as Eastern nations, particularly China, strengthen their position and influence in precious metals trading. Recent market data and expert analyses highlight this evolving landscape. December 2024 witnessed an interesting divergence in gold prices across major markets. While the LBMA Gold Price AM in USD experienced a decline, the Shanghai Gold Benchmark Price PM in RMB showed resilience, supported by the weakening Chinese currency. Both pricing benchmarks achieved their most robust annual performances in over a decade by the end of 2024. The Shanghai-London gold price spread widened considerably in December, reflecting seasonal demand patterns, despite gold withdrawals from the Shanghai Gold Exchange falling below their 10-year average. The People's Bank of China continues its strategic gold acquisition, adding 10 tons in December 2024. Marking its second consecutive monthly purchase. This strategic move elevated China's official gold holdings to 2,280 tons, representing 5.5% of its total foreign exchange reserves and reflecting a 44-ton increase from the end of 2023. According to AndySchectman, CEO of Miles Franklin, this systematic accumulation aligns with China's historical approach of leveraging markets to acquire valuable assets at advantageous prices. A notable transformation is occurring in trading infrastructure, with the Shanghai Metals and Futures Exchange now surpassing COMEX in trading volume. Andy explains that industry expert Pierre Lassonde anticipated a significant shift when the Shanghai Gold Exchange eventually dominated COMEX, moving gold pricing power eastward. This transition is further evidenced by the expanding gold trading infrastructure in China, the United Arab Emirates, and Russia, creating alternative pathways to traditional Western trading hubs like London, New York, and Zurich. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
You look at, for example, the BRICS, which Andrew, you and I have talked about a lot. We're very close to issuing their unit gold-backed currency over Enbridge, but at the 12th hour, the BIS and Augustus Carstens pulled the plug. The BIS Innovation Hub was helping China, Hong Kong, Thailand, and the UAE develop Enbridge and also to run the unit settlement token, who Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, said we've agreed in principle to this. Basically, Sergei Glaziev's idea that has now materialized. And at the 12th hour, the BIS says, well, we can't be involved with any country like Russia that's being sanctioned by the West. It's as if they just realized over the last 4 years that Russia was the R in BRICS. And so they've pulled back from this. But in essence, what they are doing until they get a more cohesive settlement currency and a platform to trade over, I think that they realize that the need for the U.S. Treasury is fleeing, and instead they would use gold as a neutral reserve asset to settle their trade surpluses. So in essence, what you're seeing are these countries who realize the West, whether it be the United States through what he calls, President Trump calls tariffs, they're actually sanctions masquerading as tariffs. You don't say 100% tariff if you don't do this. That's a sanction, and that's a threat. And instead, they're accumulating gold, which has doubled the performance of the 10-year Treasury for the last 25 years, but has no counterparty liability. It's also been reclassified by the BIS as something tier one or high quality liquid asset. And all of these things, you put them all together and it becomes very obvious that these countries have chosen to shed treasuries and to accumulate gold instead of those treasuries. And I think that is a trend that will continue. Absolutely. And I'd like to put an exclamation point on that, on a comment made by Pierre Lassonde. And recently the cumulative volume on the Shanghai Metals and Futures Exchange combined surpasses that of the COMEX, making it the number 2 most actively traded center for metals. Pierre Lassonde just came out and said the day the Shanghai Gold Exchange surpasses the COMEX in transactions will mark a seismic shift. Gold's pricing power will move decisively from the west to the east. Summed up, the gold price will ultimately be decided not in the United States, but in the East. How close are we from that moment where these fugazi numbers that you can trade at such massive distorted levels of paper contracts to physical behind it? At what point, like you said, is it over like that? And now the nations who understand and accumulate and respect what these assets really are and what they mean, the pricing will move that way. And what does that say for the LBMA and for the COMEX and for this country, for the whole Western system? You could argue, if Pierre is right, we're close to that happening, because those two exchanges combined, the Shanghai Metals and Futures combined, has now surpassed COMEX. So how far away are we? I'm not sure, but he would tell you probably closer than most people think.
The increasing prominence of Eastern gold markets is reshaping traditional global financial institutions and trade dynamics. The London Bullion Market Association exemplifies this transformation. Chinese refineries on the LBMA's good delivery list have doubled from 6 in 2009 to 13. Similarly, Chinese regular membership in the LBMA has grown significantly, expanding from a single member, the Bank of China, to 7 full members. The World Gold Council has also seen increased Chinese participation, with Chinese gold producer membership quadrupling from 1 to 4 since 2009. This institutional integration parallels broader shifts in global gold trading patterns. According to AndySchectman, formerly peripheral nations like China and Saudi Arabia are leveraging Western financial systems to their advantage. New trading centers in Brazil, Dubai, and Shanghai are emerging as significant challengers to traditional Western pricing mechanisms. These nations have reportedly developed sophisticated methods to obscure their gold purchases through alternative channels, circumventing traditional International Monetary Fund reporting structures. Let's get back to the interview.
You look at what's going on right now, like, for example, on the LBMA, and the LBMA numbers are so out of whack. It's crazy. They have pretty darn close to $4 billion of London cash spot silver claims, with total vault holdings of about 850 million ounces. So you're talking, and there are people there that are saying they're trading upwards ends of 2.9 billion ounces of silver per day, which is 3.5 times annual global mine supply. I don't have the exact numbers in gold. I think they're trading roughly 2.5 times annual global mine supply in gold. And I think what changes things now is that the big money across the globe, in particular the Southern Hemisphere, the BRICS, they understand what we're doing, and they're using it against us. We saw 55 or 45 million ounces delivered off of COMEX in December. There was an interesting comment by the gentleman who is working with the BRICS Grain Exchange, and I would draw a parallel to the precious metals exchange. Rob talked about this on Danny's Capital Cosm show, about the exchanges in Brazil, in Dubai, in Russia, in Moscow, in Shanghai, and how they will build a BRICS gold exchange. But listen to the comment the gentleman said about the grain exchange. He says, we produce more grain and consume more grain than the folks do in the West, yet we can't control the prices. It's controlled on COMEX. But with the development of the grain exchange, that will change. They know what we're doing, and they're not bitching about it, probably even adding to these short positions with paper in order to drain the exchanges slowly and methodically. Do the exchange for physical off of other exchanges. Rob talked about that in that interview with Danny. He said, look, they can buy and take stuff off of other exchanges, but it doesn't disrupt the price the way it does when it's taken off COMEX, which is the price setting mechanism. You see China going around the world and buying doré and concentrate. 75% of all their industrial silver is now concentrate. They're buying it directly from the miners, disintermediating the marketplace. And this comes from the second largest producer of silver in the world. I said that to David Morgan. He says, well, they're actually the first. That's what they told me. Well, it doesn't matter. It's semantics, first or second, but yet and now net importers instead of net exporters, flying around the world, buying concentrate and doré directly from the miners, which doesn't affect the price, or it's very opaque as to how much they're getting, and virtually no effect on the price. They're pulling out all of the stops, knowing that we're doing this. And the only reason they're not bitching is because they're the ones that are accumulating it. And that's really the key to all this. We're being played by it. And Craig is the one who's always talking about the London gold pool. But if you go back that far, the LBMA is 140 years old and the COMEX since 1974, all the way until just maybe a decade ago, all of these countries were third world. They weren't challenging or standing for delivery. Nobody did. But now they're sophisticated, they're coordinated, and they're motivated, and they're doing it just fast enough so that we can see it, public doesn't see it, and they're doing it not too fast to disrupt the apple cart. But I think the key to all of this is seeing the deliveries and the lengths. Look at Saudi Arabia and China hiding how much they're buying, not reporting it to the IMF. If the PBOC buys it, it has to be reported. But if the PLA, the People's Liberation Army, buys it, it doesn't. Remember, they're buying all the Dore. If it's not 995 pure, it doesn't have to get reported to the IMF. Look at Saudi Arabia. Oops, sorry, we didn't report it. You got caught on the import-export numbers. All of these countries are doing all they can to exploit the delivery mechanism and buy it around the globe at these stupid fugazi prices that we continue to portray to support the illusion, the strength of our Western system and of our bond markets. And it is coming to an end. And that's why I named my podcast Little by Little, because it refers to the logarithmic decay, little by little by little by little, and bang, all at once. And where are we in the all at once? Where are we on this chain? They know what we're doing. If they know what we're doing with grain, they know what we're doing with precious metals, and they're using it against us. And it too will change.
The shifting dynamics in the global gold market underscore a profound realignment of influence from west to east, driven by strategic accumulation, evolving trade infrastructure, and institutional integration. As emerging markets continue to challenge traditional pricing mechanisms and expand their foothold, the precious metals landscape is set to reflect broader geopolitical and economic transformations. This transition period presents unique opportunities and challenges for market participants worldwide, highlighting the importance of adaptability and foresight. What implications do you see for global trade and financial systems as Eastern markets gain dominance in gold pricing and trading? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.